Hey everybody, Jonathan Rose. I'm going to walk you through my favorite trade right now. And this trade is going to be an Upwork. Upwork IPO'd in October of 2018. And there's a very unique trade opportunity. Before I share this trade, guys, I put together a special PDF. I was a market maker for 5 years. How a professional market maker prices stock options. Really important. People think market makers have way more influence on the market than they really have. So go through, it's, 5-6 pages. It explains exactly how market makers value stocks using unusual options activity. Back to the trade. Let's talk Upwork. So Upwork IPO'd in October. Upwork IPO'd at $15. So $15 is going to be way down here. IPO'd at 15, opened at 2021 like all IPOs, rallied in the beginning. Everyone fights to get in these IPOs. Sold off, gyrated around, nothing really happened. But recently, after getting in this kind of consolidation, there's been a really strong rally in Upwork. Here's the trade idea. One of the trades that I teach are called lockups. Let me explain how they work. To the right, Upwork, priced October 3rd, 2018. It came out at $15, right? Just like we talked about. Upwork traded on NASDAQ. When they originally offered shares, they offered 12.4 million shares. The offer amount is 187 million. If you do 12.4 times 15, you're going to get 187 million. The 6 million is the expense that Upwork paid to go public. That's what they paid the investment banking community. Shares outstanding. This is what I want you to notice because this is why this trade opportunity exists. There's 104 million shares outstanding. Well, if there's 104 million shares outstanding, why did they only offer 12 million? That doesn't seem like a whole lot relative to how many they have. Well, here's what happens, and it happens in every single IPO. Usually the price jumps. So what the company doesn't want is they don't want those early investors to sell on the opening because some of the private equity might be long from like $2 or $4. All of a sudden opens up 22, they might run for the hills and take their money off the table. The company doesn't want that. So what they do is they restrict stocks. And they do that by having a lockup period. Upwork's lockup is 180 days. 180 days is going to be April 1st, April Fool's Day. April 1st, the lockup ends. Once the lockup ends, all those shares that are outstanding, they're going to be eligible to trade. So now, not only can you trade the 12.5 million shares, after April 1st, you're going to be able to trade an additional 90 million shares. The majority of that is going to be privately owned, who's in from much, much lower levels than even the $15 price. So there's a high probability, especially if Upwork is still at 23, that those people might come and sell. Why not? They're probably long from $2, $4, $6. Why wouldn't they sell? Once they sell, what's that going to do to the overall value of the stock? Crush, right? Because there's an avalanche of supply coming to the market and there's probably not going to be the demand. This trade makes sense. Now, the trade didn't make sense when it was trading $15 here, but now that it's rallying and you know the lockup's coming up, heck yeah. This trade's an absolute no-brainer, and it's a no-brainer because we know of the incoming shares. The best way to do this trade is with options. Because the lockup's April 1st, the most sensible options to be in are going to be the Aprils. You have 57 days. So if you look at April, 57 days, Jonathan, there's not a lot of volume or open interest. Should we still get into this trade? It doesn't matter about the volume and open interest, guys. All that matters is that the stock trades. If you want to buy it, you could always just lift the offer. I don't recommend doing that, but the 20 strike If you were to sit there with a $1.50 or $1.55 bid, go to work, leave the order in the market. If you get filled, awesome. It's a trade you want. If you don't get filled, no harm, no foul. You got no risk. That sure seems like a pretty good do to me. These are the kind of trades that we're looking for, guys. But in order to find these trades, you need to learn. Education mitigates risk. So down below in the description, check out that PDF. Learn exactly how market makers price stocks. I think it'll give you a lot more confidence moving forward, but it'll also give you some perspective about the overall role of the options market maker in the overall business of trading. My name's Jonathan Rose. I hope that helped, guys. Thanks for watching.